You have access to the markets just with a computer. You can get into any market that you want to very easily. Liquidity is unbelievable. So the retail trader has gone from, kind of a rare bird back in the day to everywhere. They're like 40% of volume in the option space. So it's democratized. You can play that game cheaply. Doesn't cost much to do it anymore, and you can trade very liquid markets. Additionally, what we see is education is easy in that you can get it anywhere on the internet. Now you got to do your homework and make sure that it's not some scam artist, but you get really, really good education. So they come educated, they're a lot more sophisticated, and they're trading a lot. So we're seeing it, traditional doctors, lawyers, accountants, those sort of folks are also have a little trading business of their own, and a little DIY sort of investment that they use. And I think typically, they're not managing all of their money, they're managing a part of it. A, they like doing it, and B, they figure out how to be profitable at it, which I think is great.
What companies do retail traders typically trade?
They are playing in the markets that are super, super liquid. So Tesla, Apple, Nvidia, Meta, all those types of stocks. Unbelievable volume. They can get in and out of things. They also play, if they're going to go market side, they'll play spiders, QQQs, and I think spiders now, my God, I think the market's like a penny wide. So it's a pick 'em market for them. Again, good liquidity. They're not going to burn money trying to get in and out of positions. And they're always looking, I think, for those sort of markets. SPX, 0DT, that's unbelievably popular. So that's a new one.
How are they using 0DTE?
Typically what the true 0DTE person does is they place a premium collection trade on, and it's usually an iron condor of some kind. So they're selling an iron condor. It's a credit spread. It's got some positive theta to it, so it's going to decay over the course of the day, and it's only got one day to live. They do it, 9 o'clock Central Time, right after the market opens and the markets kind of settle in. They get in, and they're getting out by 2 that day. So they're just trying to collect some of that premium, sell these, pretty far out of the money condors. They're very safe, except in the latest volatility environment. And they do that very, very popular and very, very easy to understand. And they have very specific rules. If they get breached on a strike, the market moves too much, they have very specific rules about when to get out and take that loss. The second one is someone who might not have enough money to trade intraday. They'll put it on at the end of the day and take the overnight risk and try to get out of it the next morning. And again, these big moves, it's been difficult.
Given the advances in technology, why hasn't the pattern day trader rule been modernized?
FINRA, at the beginning of 2025, actually toward the end of 2024, asked for comments on PDT. I'll just call it PDT for pattern day trading. And they wanted comments from the industry on whether or not that rule is still contemporary and relevant. I wrote a response to that. I know a number of brokerages did. There's many people in the industry wrote it. First of all, what pattern day trading prevents you from doing this. If you have less than $25,000 in your account, you cannot open and close a trade in a 5-day rolling, business day rolling period more than 3 times. So the 4th one, you get flagged. And when you get flagged, you go to the penalty box, you go to the principal's office, and it's not good. That rule really ultimately hurts the little guy. And I think they put it in place, several years ago to try to help the little guy, not trade too much and burn his account. The problem is that, options are meant to be adjusted. And you and I have talked about this. I think, they have to be rolled, they have to be closed, and you're always moving your option position around as an effective risk manager of trading. Additionally, all these brokerages, especially ones like ours, we have tons of risk checks to make sure people are suitable for trading options. So we look at that strongly before they even go out into the field, which probably wasn't there as much anymore. Third thing is the markets are amazingly liquid and easy to access. So the ability for people to get in and out of risk is amazing. And if you think about it, if I'm on my 3rd trade of the week or in my rolling period, and I've got a credit spread on in a stock, and I can't close it because I'll get flagged, and it closes between two strikes and I get assigned on one leg of it, guess what? I have shares now come Monday morning, and I have massive amount of risk that is just unheard of because I can't close the position out. So that to me seems just crazy. And the other thing that happens with PDT, and when the small guy can't close, those little 1 lots and 2 lots are great information for the marketplace. It prices things better when you allow people to trade. I think it brings volume back up again. Yeah, it's not that it's low, but it's going to increase volume even further. I don't think there's a massive risk at all of people over trading whatsoever. We've seen it where they don't have quite $25,000 and they're being very good risk managers of their position and their money. And when you can't do that, it's insane. I tried to do it. I tried to put $5,000 in an account and abide by the pattern day trading rules. And you're at a massive disadvantage to someone with 25 or above who can close things out intraday. Think about zero DTE. That's a big boom to the market. These people can't really trade it. They've got to box things off and figure out how to do all that. It's just a big burden for the smaller person in the marketplace. So I'm hoping the FINRA and the commission really reconsiders this. It's just not needed anymore.
What are your thoughts on the prediction markets?
What that space does is it pushes our demographic down to a different level. So our typical demographic is, older folks who are pretty well heeled, have bigger wallet sizes, professionals, sophisticated traders, but older people. I think that event space in the sports betting part, we start getting into the millennials and below, Gen Zs. They love playing that space. Now, is it gambling? I guess. But it's very understandable, right? They're kind of binary markets. You pick one or the other. And it's easy. I think it's easy to understand for people. And I think people are going to really flock to it. Now, did the PDD have something to do with it? I probably doubt it. I doubt it. I think people just like to have sports bets and event bets. Can you imagine having if the Fed's going to raise or lower interest rates or not, and by how much? You can put little parlays together with a regulated brokerage now. That's fantastic.
Are there issues with zero DTEs on single stocks?
That one's a little trickier. The reason that the SPX is so good for retail folks is because it's cash settled and European exercise. So we don't worry about early exercise and we don't worry about getting a delivery of something. It settles into a cash, so it just goes into your account. If you move it to single stocks, you know what the problem's going to be. Every day you're going to have an exercise assignment, and that's where we face the biggest set of risk, is people getting assigned on stock that they don't want or getting automatically exercised on stock they don't want. So that to me is a bit of a challenge if it's zero DT on every single day of the week, we're going to have that issue. Some people have said, well, great, why don't we have cash settled stocks like the indexes? I said, for me, terrific. I'd love it. I'm not sure all the companies would like that, but I would totally be on board that. I think whenever you can take that complexity of early exercise for dividend kind of stuff and an assignment for a retail person, I think it just makes their life that much easier. So in the zero DTE world, if it were cash settled, it would be great. If it's not, it's going to pose a little bit of a risk with getting physical delivery.